For over 50 years, the UAE has operated inside the world's most coordinated energy alliance. But on May 1st, they are walking away. OPEC and its partners control roughly 40% of global crude oil production. To maintain high prices, the group acts like a central bank for oil. Instead of allowing members to pump at full capacity, the alliance assigns strict quotas, holding back millions of barrels. Holding back that oil creates what the industry calls spare capacity. It gives these countries a massive reserve they can quickly tap into to protect their domestic budgets if global demand crashes or unexpected shortages hit the market. By throwing out its assigned limits, the UAE is abandoning the very system that has shielded petrostates from economic shocks for decades. The immediate trigger for this exit is happening right in their backyard. The recent US-Iran war has severely destabilized the Gulf region. Looking at this map of the Persian Gulf, the vulnerability is clear. The Strait of Hormuz typically handles about a fifth of the world's oil transport, but the conflict has reduced maritime traffic to a trickle, and direct strikes have physically damaged regional refinement facilities. Gulf nations have historically relied on the United States to protect these specific trade routes. That relationship fractured when Washington proved unable to prevent the region from becoming collateral damage. This security crisis exposes a major flaw in OPEC's structure. Iran is a founding member. Because the group requires unanimous consensus, the UAE is locked in a room with an adversary, severely restricting its ability to protect its own exports. That requirement for unanimous agreement turns the economic alliance into a diplomatic liability. To secure its own borders and forge independent defense agreements, Abu Dhabi had to break ties with the cartel. Beyond the immediate war, the UAE is also facing a strict domestic deadline. They are actively trying to transition their economy away from fossil fuels. To pay for that transition, the Abu Dhabi National Oil Company recently invested $150 billion into expanding their extraction and refinery infrastructure. This aggressive investment is designed to push maximum sustainable crude production to 5 million barrels a day by 2027. But inside OPEC, they were bound by a flat limit line, leaving multi-billion-dollar infrastructure and natural deposits completely dormant. A modern, knowledge-based economy focused on education and technology requires massive upfront capital to attract and retain global talent. The irony is that to afford a future without oil, the UAE must maximize its oil revenues today. They simply cannot afford to keep their most valuable asset in the ground while they build their next economy. This breakdown shows the immediate mechanical blow to OPEC. By leaving, the UAE pulls its massive reserves out of the collective spare capacity pool, drastically shrinking the organization's power to manipulate global supply. Instead of adhering to artificial scarcity, Abu Dhabi is now free to pump as much oil as it can sell, sparking an aggressive volume war. Faced with a newly unconstrained competitor operating at maximum capacity, the remaining OPEC members will be forced into a corner. To maintain their own market share, they will likely have to abandon their restraint and increase production. When multiple suppliers flood the market to compete for buyers, it exerts heavy downward pressure on the price of every barrel of oil. For heavy importing nations like India, this competition is highly beneficial. It drives down their short-term energy costs and creates a wider, more fractured pool of independent suppliers to negotiate with. However, stripping away OPEC's production quotas removes the market's primary shock absorber, injecting high volatility into a supply chain already buckling under the strain of the US-Iran war. The immediate threat to the cartel is contagion. If the UAE can successfully operate independently and secure its own defense and trade deals, heavyweights like Saudi Arabia might look at their own stagnant quotas and decide to leave. The UAE has shown that the bloc's rules are entirely optional. By prioritizing their economic transition over collective restraint, they've exposed the cartel's fragility and laid out a blueprint to break it.